All right. Hello, everyone. Welcome, and thank you all for being here. We are just about to get started. We are so excited to have you all here tonight for Home Buying in a Hot Market, which is part of our Young Alumni series that we offer with the CSU Alumni Association and with our friends here at Canvas Credit Union. We are here to build RAM community and be a resource for you alums and our community members. And this is just one of the ways that we can do that. So again, thank you all for being here tonight, for participating. We have over 75 people signed up, with attendees joining us from all over the world. So that's really exciting. And while I'm chatting, if you wouldn't mind dropping into the comments section where you're tuning in from tonight, we would love to kind of see where everyone is tonight. Again, my name is Sophie Matthews, and I serve as the Student and Recent Graduate Engagement Specialist here for the CSU Alumni Association. And I do just, again, want to thank you all for being here. Many of our attendees tonight are CSU Alumni Association members and are also Canvas Credit Union members. Thank you all so much for your membership to both of our companies, our endeavors. It makes events like this possible and really makes a difference in the lives of all of our CSU alums. Once we get started tonight, I will also include more information about membership in the comment section for you below for those who are interested. This recording will be posted to YouTube immediately after we end tonight, and the slide deck can be made available to you via the post-event email that we will be sending out, so keep an eye out for that. The recording of this webinar and some additional resources are also going to be available for you, so be sure to reach out if you are looking for that. As we are progressing through the night, please feel free to use the comment section here on YouTube. It is underneath your screen, or sometimes to the right of the presentation. That's where we will be using similar to a chat feature. So please drop everything in there. Awesome. All right. Well, I'm so thankful that you all are here tonight. So happy to be joining you. And I'm very excited to turn it over to our friends over at Canvas Credit Union.
Hi. Thanks, Sophie. This is Nancy from Canvas Credit Union, and we just so deeply appreciate the partnership that we have with CSU and with the Alumni Association. So we are going to be using that comment section as a way to communicate tonight. Really encourage you to submit questions, comments, ask for clarification, anything. And as Sophie said, we'd love to know where you're tuning in from tonight. So if you can throw into the comment section where you're watching from, that would be fabulous. We're going to have another question for you in just a second, but I did want to mention that besides myself, we have Brett and Tammy from the mortgage department at Canvas Credit Union. So they're our mortgage experts and will be doing most of the presentation and be watching chat, looking for your questions and comments so that we can get those addressed. It would be helpful if we knew where you were from, just so that we can make information as applicable and relevant as possible. So that's the reason for my next question. I'm seeing some communities come in. It looks like Colorado is represented so far. If you would also add to the comments, if you are looking for information about refinancing, or if you're thinking that you're coming to this class because you're a first-time home buyer, or if you're a repeat buyer. So we just need one-word answers: refinance, repeat buyer, first time. Throw that into the comments as well, so that we can be sure we're directing our information in the best possible way. And Sophie will hop to the next slide while everybody's doing that. This is what we're planning to talk about tonight. We're going to be sure that we look at the considerations you want to make before you jump into home ownership. We're going to talk about the different kinds of loans that are available, because there are different kinds of loans. Home loans, anytime you get a home loan, a loan to purchase a house, it's called a mortgage. And believe me, they come in a variety of flavors. And then we're going to talk about the process of shopping for that home, offering and making an offer, going under contract, inspecting it, and otherwise going through the whole process that gets us finally to the purchase. Sophie, next slide. Purchasing a home is indeed one of the biggest investments that most Americans will make. So buying your first home is an emotional decision. And for many people, it's one of their biggest financial goals. There's no right or wrong answer about when to buy. The amount of money you save toward down payment depends on a lot of things. The overall shape of your finances or your credit, that may determine when it's right for you to buy. A couple things just in general about the market is that there tends to be more inventory in the spring and the summer. But on the flip side, you might be able to get a better deal during the fall or winter. So the best time to buy a home is when it's right for you, and there is no definite answer on when that might be. I'm going to let Brett talk for a little while. We're going to share that camera.
And we can go to the next slide, please. Hello, I'm Brett Holland with Canvas Mortgage. Tammy is monitoring the chat, and she has a wealth of knowledge and information, so please don't hesitate to throw any questions down there in the chat. When you're looking at buying versus renting, there's obviously a lot to consider. Advantages of buying can be building equity, definitely having a sense of community, independence without a landlord. You can personalize the home. You also have to understand, though, that there are maintenance costs that you're responsible for now, and to be on the lookout for those. You're responsible for things like taxes, paying the mortgage. There's less mobility than renting. Obviously, it's a little harder to sell a home, possibly, than to just move when the lease is up. When you're renting, no responsibility for maintenance. It's easier to move, but you miss out on the tax benefit. You don't build equity. You don't have any control over rent increases. And of course, if you don't pay rent, you could be evicted. So it's really a personal decision over buying or renting, but there's a lot of advantages and considerations to think about. We can go to the next slide. A lot of advantages to home ownership. Obviously, financial stability. Once you have a mortgage, there's very little change in your payment after that, other than taxes and insurance going up. There's the appreciation. Case Shiller had a study recently that since 1942, we've only had 7 years of declining home prices. 4 of those years were 2007 to 11, when credit was, let's say, maybe a little easier to get than it should have been. So it's just hard for me to get my head around. Since 1942, there's only been 7 years of loss for home ownership. So that's really something to consider when you're thinking about buying a home. We can go to the next slide, please. When planning for buying a home, you have to understand the expenses. We talked a little bit about that before. When you're renting, you basically have your rent and your renter's insurance. That's it. When you have a mortgage, you have to consider the mortgage itself, the taxes you're paying, the homeowner's insurance, the mortgage insurance, the differences between the two, your estimated monthly HOA. In this situation, we're comparing an apartment to a condo or a townhome, where the HOA monthly is higher. But in general, when you're looking at renting versus buying, the payments should be fairly close. Obviously, if rent was half as much as buying in a place that was similar, you'd rent and hang on to the down payment money. But in most cases, in most healthy markets, the payments are relatively close. And then it just becomes a personal decision if you're in the right area and you have the right means to pay. We can go to the next slide. Oh, we're going to go to Nancy.
Back to Nancy to talk about some credit and credit score information. So your credit report is going to impact several really important and expensive portions of the home purchase. So a good credit score makes it easier and faster to get approved. It means that you'll pay a lower interest rate on the mortgage that you get, and it influences the cost of your insurance. So because it can take time to fix any error that's on your report or to go through some steps to raise your score, We really encourage you to start checking your reports and scores at least 12 months before you're planning to buy. And let's go ahead, Sophie, next one. So what does affect your credit score? There are lots of different parts. These are proprietary math formulas that go into making up your score. But the biggest impacts on your score are two things. One is that you pay your loans on time. So pretty straightforward. If you have a loan, making your payment on time will be a really, really strong part of having a good credit score. And the other portion that makes up a big chunk of your credit score is, are you using only a small amount of your credit card limits? So we do have several resources to help you understand more about your credit score, about how to manipulate that, how to get it raised up as high as it can be before you purchase. There's going to be a couple names. Tammy and Brett both have their contact information at the end if you have questions about how to raise your score. If you're a Canvas member, we really encourage you to check out Credit Path, and that's in your home banking. And then this series of education, we actually, for the Alumni Association, did a whole presentation on credit scores, and that would be in this YouTube section of the Alumni Association if you want to go back and look at that presentation. So some really strong reasons why you want to have a great score. Couple things to keep in mind, because there's a lot of myth around credit scores. There are some things that don't impact your score, but will impact whether or not you're approved for a loan. Some of those things are your debt ratio, and we can talk more about that in a minute, your income, how long you've lived in your current location, and the length of employment. Again, those things are not part of your score, but they are part of that decision-making about whether you will get a loan. Sophie, let's hop to the next one. So it is important that you check your credit reports and be sure they're accurate. Your score is determined by the information that's on that report. If there's something wrong with the report, it's hurting your score. So I guess unless it's something that's really good, but it's wrong. But yes, we want this to be accurate information. So the place you can go to get your reports is annualcreditreport.com. They're free. They extended how often you can get them for free. So instead of just once a year, they're still allowing you to check your reports once a week. I'm not sure I recommend that, but you can check your reports very often. And this does not include a score. This is just looking at the information on your report to be sure that that's accurate. To check your score, there's a lot of opportunities. Many credit card companies, banks, and credit unions have realized that consumers care about their score, and they're offering that for free. So that is a great place to check. Canvas is one of those places. You can look online in home banking and see your credit score. So we encourage you to know both your score and that your report is accurate. Sophie, let's do the next one. Sometimes it helps to just see a real black and white, gray and orange example of what these numbers mean. And it's nice to say, yeah, a good score helps you. Well, here's some real concrete evidence of how a good score helps you. It's going to affect the interest rate you're paying. It's going to affect how much that monthly payment is. It's going to affect the insurance cost that you pay, the price of your mortgage insurance. So there are enough factors going into your monthly mortgage payment that are affected by your credit score. We just want everyone to be really aware of the importance of that. So bottom line, a good score saves you a lot of money. Back to Brett.
All right. Oh, one other thing on credit is when you're not shopping for a loan, you should strongly consider putting a freeze on your credit. You can visit each of the bureaus, TransUnion, Equifax, Experian, and it's really a pretty easy process. Two of them, I think you can do it online. One you have to call.
Nope, everything's online.
Everything's online.
Everything's
now.
online.
Okay,
you have to do all three though.
Good. Yeah. Well, smart to do, but not when you're shopping for a mortgage, because that can be a real hassle. Okay. Next slide, please. Let's see here. Okay. So Nancy just talked about credit. Another area we as lenders look at are assets. And one of the first questions we get is, how much money do we need for down payment? And at Canvas, well, first of all, the amount of money you need for down payment is strictly your personal financial situation. But generally speaking, at Canvas, we have a no money down option. We have all the conventional and government programs. So we have no money down, 3%, 3.5%, 5%, 10%, 15%, 20%, any increment in between. So as far as down payments go, that's the story there. It's really dependent on your situation. But again, there's a lot of different options out there available. We can go to the next slide, please. Sources for down payment. What underwriters and what the rules and regulations require in the lending world is that the money be what we call sourced and seasoned. So it needs to be in a bank account, in an institution where the money, quote unquote, makes sense. So get that money from out from under the mattress, out from the coffee cans, and get it into the bank, because we can't use cash, unsecured loans, cash advances on credit cards, just normal places where most people keep their money, checking accounts, savings accounts. There are other places down payment can come from: loans on 401k withdrawals, loans against IRAs, gifts from family members, down payment assistance programs. All that's great, but the main thing to understand is that the money needs to be sourced and seasoned. I think we can go to the next slide. Oh, thank you very much. All right. So when you are figuring out your budget and how much you can afford, you may wonder, well, what do lenders look at? General rule of thumb we use is a 28-36. So for example, if your household income is, say, $10,000 a month, your rule of thumb would be that the house payment shouldn't exceed $2,800 a month. When you add in your expenses, it shouldn't exceed $3,600 a month. So in this situation with $10,000 a month household income, $2,800 would be kind of our rule of thumb on looking at qualifying, and probably what you should be looking at for your budget as well. We go to the next slide. Mortgage options. There's a lot out there. It's good to know a little bit about all of them. Conventional mortgages, those are loans that are insurable by Fannie Mae and Freddie Mac. In Colorado, the limit is $726,000. So if the loan is more than that, it goes into the jumbo mortgage category. Oftentimes, it makes sense for a buyer to use one of our government insured programs. Those consist of programs like FHA, which is more for your credit challenged borrower. We have our VA loans for our veterans, active duty and veterans, our service people, which is a great option, can be a great option for them. We also have our USDA program for our rural buyers in the more rural areas. So government insured mortgages can make a lot of sense as well. Within the mortgage categories, typically two kinds: fixed rate mortgages, where the interest rate is fixed for the life of the loan. Most people take out a 15 or a 30-year mortgage. They are available in increments of 10, 15, 20, 25, and 30. Interesting note on fixed rate mortgages, serious consideration and some availability on 40-year fixed rate mortgages. I know in Japan, they have 100-year fixed rate mortgages. So you'll probably see some news about lengthening terms to make things more affordable. Adjustable rate mortgages, if you are considering an adjustable rate mortgage, make sure you understand the index and the margin and how those work and what those are. So always, always important to work with an experienced person when it comes to your personal finance. I think we can go to the next slide. Again, hit that chat with questions.
There's a question if you'd like to.
Sure.
Is there a general mortgage option that is best for first-time buyers, or does it depend?
Yeah, Zoe's got a question here in the chat. Is there a general mortgage option that's best for first-time home buyers, or does it depend? Yes, everyone's a little different. It can make great sense. Generally speaking, first-time home buyer programs are assistance with assets, with money down. So if someone doesn't have funds for closing or funds for down payment, that can be a great way to go. First-time home buyer options generally have a little bit more cost involved than people that don't use first-time home buyer programs. Okay, I think we can. Oh, you got it on the next slide. All right. Let's see. Secure financing. Yeah, before you go shopping, make sure you've talked to a lender. Make sure you get pre-approved. There are different levels of pre-approvals. There's a simple pre-qualification, which is where the loan officer has not physically inspected your credit and income and asset documentation. There's a pre-approval where the loan officer has inspected those documents. And then we have a qualified pre-approval, which is one step further, where an underwriter has actually examined the credit, income, and asset documentation for the buyer. If there's any gray area, if you have any concern that you're close to qualifying and you're not sure, always ask for the qualified pre-approval. At Canvas, we do that all the time. One of the sayings I have with my team is surprises are for birthday parties, not real estate transactions. So we want to make sure that we are avoiding surprises. So I like to get all of my loans reviewed by underwriting before we even have a contract.
We have another question.
Oh, good.
From Teresa, if you see it on your screen there.
Yeah, Teresa, thank you. Question, how does 100% finance mortgage through Canvas impact the interest rate? So the interest rates are a little higher for 100% financing. Rates are dictated pretty much by risk. So the rates are a little bit higher than, say, a 5, 10, or 20% down mortgage rate. But we're talking, Tammy, wouldn't you say more in the quarter, half point range, not a full point? So it's not like it's 1 or 2 points higher, but it is a little bit higher. One thing about our 100% program, though, that I will point out is that our mortgage insurance factor is super low, just a 0.25%. So on a $400,000 loan, that's about $83 a month. So that's the mortgage insurance factor can really impact a payment as much or more than the interest rate sometimes. All right, moving right along. Are we back to you yet, Nancy? I got one more. Oh, we got one more. Yeah, one. Next slide, please. All right, documents. This is such a great thing to understand and know about. What we look at in the lending world, basically 4 things: credit, income, assets, and the property. So that would be the appraisal and the contract and how that matches up. But obviously for credit, what we're going to need is your ID. For income, we'll need usually things like W-2s, pay stubs, maybe tax returns. For assets, we'll need bank statements, 401k statements, IRA statements, that sort of thing. And I would say one of our biggest issues is people not providing statements, providing camera screenshots, JPEG, you name it. We've seen shoeboxes full of documents we have to scan. The best thing you can do is to be organized. And that would mean sending in PDFs that are well labeled. It helps your loan officer, the processor, the underwriter. The messier stuff comes in, the more likely mistakes are made. So it benefits you to be organized as well when it comes to that. And we do like PDFs too. That's best for moving stuff around and keeping all of your stuff super, super secure. That's very, very, very important to us at Canvas. All right, let's see. I think that's my last slide for now. I think we're back to Nancy in the next slide, please.
So I don't know about you, but so far what I'm learning is that it can be kind of tricky and there's a lot of options and you really need to work with a professional. So I hope you're taking that away as well. There are a couple things about a home loan that are different from other loan types. So we just want to be sure, especially for people who are first-time home buyers, that they understand this. Sometimes it catches people off guard. So when you get a car loan, you're just paying the loan payment back. When you have a mortgage and you've borrowed money for a home, you are paying back more in your monthly payment than simply the loan itself. So a couple of things to consider. When you are repaying the mortgage loan, the principal and interest payments look a little different than other loan types. So you'll notice on the slide about how at the beginning, much of your payment is going toward the interest. And then as time goes by, more and more of your payment is applied to the principal. But besides principal and interest on the loan, the other things that are being collected in your monthly mortgage payment are 1/12 of your property tax and 1/12 of your homeowner's insurance. And the reason for that is that everyone has learned over time that it can be challenging to come up with thousands of dollars all at once to make that property tax bill. And so it's much more reliable. It's much easier on the homeowner, and it makes sure that you're not in default on those property taxes if we can collect 1/12 each month, and then the payment is made by whoever is collecting your mortgage payment. The same thing with your homeowner's insurance. You don't have to worry about making that payment. The payment is made by whoever's receiving your mortgage payment. That money that is collected all year long goes into an account called an escrow account, and then the bills get paid by the company that's been collecting your mortgage payment. So that makes up PITI. You may have heard of that: principal, interest, taxes, and insurance. The other thing that might be included as part of your monthly payment is mortgage insurance. If you are in the kind of a mortgage loan that needs mortgage insurance, then that payment will also be included in your monthly payment that you make on time to your lender. Just to clarify, things like utilities, HOA fees, anything else that you have that's part of being a homeowner, those are not part of that monthly payment. So always happy to take questions if you have any about that. Otherwise, Sophie, we'll hop to the next slide. In every real estate market, there's always some kind of big keyword or trending activity that's going on, and you're going to hear about it on social media. A couple years ago, we were in a seller's market for sure, and one of those terms that you heard was an appraisal gap, which meant that buyers were so eager to make a purchase that they would actually bring more money than the home was appraising for, than the home was worth. And we saw people that were paying $20,000 or $50,000 over the value of the home. Well, those times have changed. So with the increase in interest rates recently, then this appraisal gap isn't the thing that's going on anymore, which is good news for you. But with sellers who are still looking to get the maximum profit, they're more willing now to negotiate on some other things. Maybe they'll help you with closing costs. Maybe they'll help you buy down the rate so that your interest rate isn't as high as it normally would have been. These are just some of the examples of how creative financing is used to make sure that people are still able to buy a home. And it is reinforcing again how important it is that you talk with a professional that you trust, that you find somebody that you can ask questions and really learn what the options are because these things do change over time. And what was true a couple years ago isn't true anymore. So you need to be working with a professional who's keeping up with the market. Let's move to the next slide, Sophie. This is also about working with professionals. The real estate purchase process has become increasingly complicated over the years, partly because of regulation, partly because of markets changing. And so it is really important to have an experienced loan officer. It's also really important to have a real estate agent that you connect with, understand, relate to, can ask questions of. You guys are going to be joined at the hip for a while through some pretty tense situations. You need to have somebody you're working with that you trust and understand. So most of us have a family member or a friend who's in real estate. That may not be your best choice, especially if they're new to the field. This is a really big investment you're making. We want you to be comfortable with your real estate professional. So we're going to encourage you to interview a couple of people. Ask them some questions. You can see on the screen some of the great questions you can ask them. And especially you're looking for an industry professional who works full-time as a real estate agent and probably has been doing that for at least several years. So there's some questions there. You really do. The other question I'd throw out as a possibility is some agents are more comfortable working in a particular niche market. So maybe they specialize in first-time home buyers or condominiums, or maybe they specialize in million-dollar properties. You need to find somebody who's also really tuned in to the market you're looking at. Brett, back to you.
Okay. Those are great, Nancy. Those are great tips. We can go to the next slide, Sophie. Let's see. All right. When you're looking for your home, there's some things you're going to be looking for: bedroom, square footage, convenience, features, amenities. Your realtor should be looking out for other things. Make sure the value comps out. Maintenance and structural concerns. I mean, we can't all be experts about everything, especially when it comes to a home. So again, work with a pro who's got your back. Other things like schools impact value of homes, whether or not you have children attending school or not. Drive by the house at different times. Sometimes people visit on a Sunday morning, they write a contract only to go, look at the house on Thursday night, and it's a lot different. Know about things around the house like traffic or noise or different amenities, just different things to consider when you're looking for your home. We can go to the next slide, Sophie. When you make an offer, make sure to include the pre-approval. I'm sure your real estate agent will ask for that. Also, be prepared to give earnest money or deposit. This is just good faith for the seller to keep. There are deadlines on your purchase contract where if those dates pass, the seller can keep that earnest money. So make sure you are aware of dates on your contract. Also understand that this earnest money deposit is not an extra charge or an extra fee. It goes towards your down payment or it goes toward the funds to close for the transaction. And also understand that after you sign the contract, the process doesn't just end. You have your inspection and maybe some ongoing negotiations. So just be kind of open-minded about that. I think we can go to the next slide, Sophie. When you get 30 days out from closing, things really start to happen. A lot of things start to come together. You will order your home inspection. That's the responsibility of the buyer to find and order your own home inspection and negotiate the repairs or concessions as a result. Behind the scenes, the lender, we're going to order your title work. We'll order the appraisal. We will coordinate evidence of insurance with your homeowner's insurance. Just like the inspection, you are required as the buyer to pick out your own insurance agent. And then after a lot of that stuff kind of comes together, you close and take possession. I think we can go to the next slide, Sophie. This is about the home inspection that you order. You are responsible. Learn what is and isn't included. Most everything is included, but some things like the roof, chimney, exterior buildings, things inside the walls, that's not included. Make sure you get a copy of the report. Also understand that any of that is negotiable. You have an inspection deadline in your contract to get that done and have any repairs negotiated. And again, keep great records for anything that happens as a result of the inspection. Let's see. Can I answer? I'm going to go ahead and answer that. Zoe asks if there's an estimation of how much all these extra fees would cost. I think you're talking about the home inspection fee. Usually, what do you think? $300 or $400 in that range. Closing costs on a loan, I would say $3,000 to $4,000. Prepaid expenses, about $2,000. So in addition to your down payment, roughly about $6,000. But again, make sure you work with someone that you trust that can get you numbers so that you know exactly how much the closing costs are, what they are, what the prepaid expenses are, and what they go to.
That depends on the price of the house.
Yeah, that's true. And Teresa or Zoe, I'm sorry, a lot of the cost depends on the price of the home. More expensive the house, those fees are a little bit more, that sort of thing. What else? Is that about it? Okay. Next slide, please. And Zoe, we can get you a detailed, itemized list of the fees and what they are. Closing the deal. 3 days prior to close, lenders have to get you the closing disclosure that has your estimated or has your funds to close and your monthly payment, interest rate, all that information. You should review that with your lender. 24 hours prior to close or right around there, you'll do a walkthrough. You'll transfer utilities, and you definitely want to make sure how the lender wants you to bring money or get money to closing. Is it a certified check? Is it a wire to the title company? Make sure you understand how to get money from your account and where it needs to go for closing. I think that's it for mine on this part. I think we go back to Nancy now. So I think we can go to the next slide.
So we do want to stress that home ownership is not a one-time magic thing. You sign your name a lot and then boom, you're a homeowner and it's all over. There is an ongoing responsibility. One of the things we didn't really talk about when you're considering getting into different homes in different neighborhoods is really understanding the HOA, the Homeowners Association documents, to be sure that you can live with what the HOA has spelled out for that neighborhood. If you are the kind of person that doesn't want to live where there's a very strict homeowners association, then you need to be sure you're not looking for homes in that area. That's something you'd want to talk about with your realtor. And just the fact that now that you're the one in charge, now that you're the one responsible, there's a little more thought that has to go into keeping up with your finances, keeping up with the maintenance on the home. I was hanging out with one of my kids this last weekend, and we were cutting down trees. We had the chainsaw and the gloves and making it happen, because that's part of the maintenance that's now your responsibility. So not just when things go wrong, but actually doing the routine maintenance, knowing that you got to keep an eye out for things that maybe you didn't used to keep an eye out. One of the options that's available to people as they are jumping into home ownership is something called a home warranty. And you can choose to purchase that at the close or when you are just getting into the house. It will offer protection against the breakdown of a lot of really common appliances and electrical systems, plumbing systems, washers and dryers, the kitchen appliances. So you can purchase a warranty that will help you be a little more comfortable about those first couple years of home ownership. So that's an option for you to research, see if that's right for you. Another common recommendation from financial experts is that you plan to set aside 1% of the purchase price for your emergency repairs and your scheduled maintenance. So on a $300,000 home purchase, that would be $3,000 a year that you're deliberately setting aside, knowing that at some point the furnace is going to go, or the roof is going to need repair, or the hot water goes, and it's never at a convenient moment. So just some responsibilities, and trust me, it will make your home ownership experience much more pleasant if you have planned ahead for some of these repair kinds of issues. Sophie, let's hop to the next one. So here's kind of a review of the things that we've talked about so far, and getting you through this process up until you are the magic homeowner. But so you start with looking at a budget, thinking about how much you can get, how much you can afford. I do want to remind you that even before that, you're going to want to look at your credit score, make sure that your reports are accurate. Then you need to get the pre-approval from your lender. Be sure that you understand and are satisfied with that financial side of the process. Now you start looking for the home. You're working with your real estate agent. You're going to go on tour. You're going to make offers. And then when your offer is the one that's accepted, now you move to that next step, making sure the inspection gets done, the appraisal is going to be ordered by your lender, and then you have that opportunity to negotiate. That first offer is never your final situation. You can go back and make changes and negotiate and say, I'm not comfortable with this, or what would you consider doing that, before you have that final contract and go to closing. So again, just sort of an overall picture of the process of getting to home ownership. And Brett's going to take us into the last few slides here.
All right. I love that checklist. You guys make sure you get a copy of this presentation. A lot of good slides like this checklist to hang on to. But we could go to the next slide. And we're almost done here. Very important to work with a pro who has current market stats. You can look a lot of this up online, but it's important to work with a realtor who's got a lot of this information so that you can just have a better understanding of the market and be more comfortable moving forward. You know, pending sales, new listings, listings that have closed, all that stuff. Also strategies like Nancy touched base on, these different buy downs that are being used now. Sellers are definitely a little more willing to work with buyers now than they were a couple years ago. So just important to know your current market conditions. And we can go to the next slide, Sophie. Once you're in the home and you have a mortgage, when rates come down, if they do, hopefully they will, but people start thinking about refinancing. And a lot of people think, well, if there's a lower rate, boom, I should refi. But that's not always the case. You really need to understand that the loan you start with, or your current loan before you refinance, you're much further along typically in your amortization schedule. So that's where really you need to be looking at as far as if refinancing makes sense or not. So it's important to work with fiduciaries who have your best interest in mind. Definitely want to consider how long you're going to stay in the property. The longer you're going to stay in it, the more likely it makes sense to refinance. So do you understand how closing costs work with a refinance? Do you understand when you'll come out ahead and break even? And can you qualify for the refinance? So a little more to think about than simply, oh, the rates are lower, let's go ahead and pull the plug on a refi, because they do cost money and your amortization schedule does start over. So there's some things to think about there. I think we can go to the next slide, Sophie. And how Canvas can help. We can help you a number of ways. I've been originating loans for over 20 years now. I've never worked anywhere where we've had such consistently competitive low rates, super low fees. That's always the most helpful. We have our 100% down program. Canvas, we're a .org, not a .com, no shareholders, very active in the community. And we absolutely love our relationship with CSU, the faculty, staff, and alumni. Go Rams. So we'll help you any way we can in your personal finance journey. I think all personal finance should start with a credit union, whether it's your checking account, savings account, car loans, home mortgages. Everyone should start with a credit union. It just makes the most sense. Please let us know what questions you have. We're here to help you any way we can. Nancy, do you want to close up or switch it back to her? We'll go with the next slide, Sophie. I think it has our contact info in case you guys want to reach out.
Well, I don't know whether Brett and I just talked really fast or if we finally got these slides to be the most efficient method of communication ever. But please, if you have questions, if there's anything that you need a little clarification on, please, please, please put those comments in there. We would love to expound on anything, make sure that everybody walks away with the knowledge they need. And watch for the slides coming. Sophie's got the magic email that sends the slides out. But we'll stay on for a few minutes and make sure that we've answered any questions that you still want to submit.
Awesome. Thank you so much to our friends over at Canvas. We are super appreciative of them tuning in today. So again, thank you all. I went ahead and I dropped a survey link in the comments there. If you all wouldn't mind taking that, it is also in your post-event email. But we do sincerely look at every single piece of feedback that is given to us. And as we are going about reshaping and changing these things every day, we really value your feedback. So if you wouldn't mind filling that out for us, that'd be much appreciated. And yeah, we'll hang out for a little bit longer in case anyone has any questions. But in the meantime, have a great night and thank you for joining us. Go Rams.
All right, Brett, I'm going to.
Okay. You're welcome, David. Thanks for attending. Most welcome, Teresa. Adina, yes, there are some regulations. It's just fine. It's not a problem, but just make sure you have your paperwork in order and get that to your loan officer. They'll make sure that that's all okay and approved.
Brett,
But-
do you want to repeat the question just in case?
Yeah, Dina had a question. Are there any restrictions or regulations to think about in the case of green card holders versus non-immigrants regarding the loan? Tammy, you want to get anything on that?
Just-
Have your documentation in order, get it in. Rates and stuff are the same. There's no difference there. Thank you for attending, Adina. Is there anyone still on the call?
We can't tell.